everybody, welcome to the live stream, and of course, welcome to the day where Activision Blizzard is no more. It is now Microsoft Blizzard. Let's hope that's what they rename it to. Yes, Microsoft has purchased Activision Blizzard. I know it's a weird place to start, but guys, I think that's a pretty big deal. 2023, big news. I woke up this morning, I was like, whoa, okay. A few people had sent me the message, and yeah, it's going to take the internet by storm because that's a big thing. And it kind of makes sense because Blizzard obviously bought other studios and they're adding them into their, I guess, realm. But, this is a bit of a problem as well. Have they just added too much games companies and become anti-competitive again like they were in the mid-2000s? Will they get blocked on this deal? Time will tell. Obviously, market's gone up to around 62, 63 billion of the 70 billion valuation. So it's 2023, the deal will be done. And it looks like that current CEO is still, the old Bobby, he's still in control for now. Broader markets, though, everything's down. As we know, Nasdaq is falling. Nasdaq's leading the charge down. US 30 also down fairly hard today, being the Dow. And then we have US 500 down 1.66. So why is this? It's probably due to uncertainty about how many rate hikes are we going to get. And again, we knew this was going to be the story of 2022. We basically have quantitative easing getting pulled back. We've obviously got bond purchases in general getting pulled back. And then we have our big factor over here, which everything leads into anyway, which is interest rates. So if interest rates ended up being 4 times, this is the question we have for the room. Is that actually going to cause something that we shouldn't be buying? Are you guys concerned? I want to know this about interest rates from a medium-term investment perspective. So are you actually worried about these interest rates, or do you think this is an opportunity? Let's let the room answer this right now. What do you guys think? I want to know what you think. Let's find out. Will this market just correct already, says Mark White? Well, yeah, if we get underneath here, then we should be into the area. Eric's noticed I've had a haircut over the break. Yep, a little bit of a haircut, which has been good. Had a bit of a mull going on over that Christmas, you would almost think, like the cool kids nowadays. In America, do young people have mullets again? Tell me this. A mullet's back in or something. It's pretty disgusting. There seems to be mullets everywhere when I went down to the park. So 1% here on the 2-year. Continue to watch this. The spike here is really pointing to at least a down correlation initially with the Nasdaq. And let's move over to the Nasdaq 2% here. So Nasdaq closing in on the trend line. So it's going to close in pretty much underneath. First time on the daily for a long time that this is closed underneath. Is it enough to say, oh, yes, it's going to completely get trashed yet? You would think, yeah, it probably is the beginning. And the reasons are got to do with Fridays, of course, bounce here, no follow through in today's session, sell off underneath. Once you get underneath the previous wick, you've broken the trend line and you begin the fall. So let's see what the room says here. Deborah Smith says very concerned. Andrew says opportunity. Unprofitable tech will get wrecked, says Mike. Initially, yes. And then worried it's an opportunity. An opportunity, concern, not concern. Concern for small caps needing capital, and worried about market response. Okay, so most likely the market usually doesn't like this idea of uncertainty. So we all know that when we go into interest rates and interest rate hikes, the uncertainty is around how many hikes, how fast are the hikes going to happen. And the Fed has basically come through in its previous statements, and Jerome said, we're going to have to move faster than we expected. So when he says something like, we're going to have to move faster than we expected, the market says, whoa, what exactly does that mean? How many are we going to have? And that becomes the concern, the uncertainty. Remember, markets hate that. Once you get certainty, regardless of whether it's 2 hikes or 3 hikes, the market will most likely rebound. So or even 4 hikes. The actual reality of the situation versus the uncertainty will be better than you expect. So it's one of those sell the rumor, potentially buy the fact. At least that's how I'm seeing it. I think this is a massive opportunity for 2022. My personal opinion, you do whatever the hell you want to do. Obviously, I can't, I'm not trying to impact that. I'm just trying to give my opinion here. And you'll notice this trend line, if it does breach through, we start to get ideas of, okay, where's the next stop? And the next stop is not just, a few points away. it's at minimum trying to get to 14.5, you would think. So at minimum, we pull back to something like a 14.5, which is another 5% down. So the bad news is there's a high chance likelihood, especially if the weekly closes anywhere underneath here, that we're going to the monthly S3 on the Nasdaq and that we push all the way down into this 14.5 zone. And conversely, on something like the US 500, if we're able to breach underneath the 20, it's going to try to push down to this 4,300 period. So we've basically got pretty large, decent pullbacks here coming into the start of the year, which is, as we expect, the period of time it should happen, that January into February type of season. If we look at stats, do I have the stats up here? Stock market annual returns. You'll notice January has a negative correlation with it, 1.1%. September obviously has the negative correlation as well. 2 weakest months of the year. And as we know, Feb is really bad for specifically one section, and that is tech. So tech tends to be this sideways action. So don't think that this is going to be over in 2 weeks. It's probably going to take a little bit of time. And as it fixes itself, we're going to have amazing April potential and amazing May potential for many markets. So I'd see it as an opportunity. Do not necessarily be fearful this year. People are going to be fearful. We're all going to put crashes in our YouTube videos and say this and that. But the reality of the situation is it is unlikely to actually be immaterial, causing the market to have, a 30, 40% fall. It's more likely to be a correction between 10 to 15% maximum. Jeff says, don't think hyper stocks will recover fully this year. They won't recover fully. You are correct, Jeff. However, there will be pullbacks, which will be still very significant as a percentage. Let's move over to IWM here. Let's have a quick look. This is the one that we were talking about being a bit of the teller that the rest of the market would come down and it would fall fairly hard. And that is literally what we're seeing right now. IWM's putting pressure on the literal bottom end. I mean, it hasn't been here for a while. And once it gets through this point, as someone mentioned correctly before, small caps, they're susceptible to one thing, and that is, of course, lending and being able to borrow and being able to get cash. In the longer term or in the medium term, they will get the cash regardless of whether it's at 0.25%, 0.5%, or even 1% lending. I mean, it's not the end of the world in terms of the interest rate, but the uncertainty is pushing this through. And you would think from the daily perspective, it's starting to really crack. I mean, this close here is going to be underneath the previous week. So tough to exactly tell, but your thought process here is the small caps are basically gone. They're about to drop off. And if they cannot buy in the next session, you'd think they're coming back down. Will it be opportunity? Absolutely. And you can tell across quite a lot. Look at this. We go into the stocks of interest, mostly technology stocks and small caps here. Look at them all. Down very hard. Lots and lots and lots of sectors down. Nvidia down 4%. Let's have a look through some of these stocks. Nvidia, very much or very likely for it to now try to go back to that 230 that we've been aiming for a while, at least to get back down here. You look at all these other stocks, new lows, Twilio, TDOC will be a new low. So new low on TDOC. Microsoft, obviously big deal, getting through previous resistance, becoming support. Apple 1.65%, not showing the full crash off yet. Square, new low through today's session and then slight recovery here. Enphase creating a new low. Almost every one of these stocks is creating a new low, and it doesn't look like there's support for most of them in place. So yes, unfortunately, I do feel like we're going into this corrective period. Once we get in there, the biggest thing to be watching is the US 500. And all you really need to do, guys, it's pretty simple. If we close weekly under 20, we very likely go to the 50. And that's the simple kind of reality of trading the market. This is the first breach that we'll see of the 20 in a very long time. And if it does occur on the weekly and the weekly closes down, we most likely go to the 50. What do you guys think about that? Do you reckon that's what's going to happen? It does look like it's tipping over at this stage. Let's read some chat comments here. Weekly 100 on the SPX is yummy. Okay, so weekly 100 will be quite a far behind, Gary. We'll see whether that happens. I think 50 is most likely. Jeff says, Gary, I'm hoping for S&P 500 hitting a 10% drawdown will be healthy for the rest of the year. That will literally push you directly into the 50. So that would be my likely scenario here, Jeff. And yes, it would be healthy for the rest of the year. Nice move in silver. Silver is up 2.1%. It's actually beating out gold today. And you'll notice that certain things have gone up. Things like oil are still powering through. So it's not across the board. And I think that's something that we need to also be looking at here. Let me just bring on our current sector analysis for the day. All right, here we go. This is the current sector analysis for the day. We'll go daily over here. And we'll bring in US sectors. And you'll notice that energy is actually still somehow up through the session. And while some stocks are down, it's not every sector across the board that's down as hard as each other. So real estate, REITs, communications, something I've been looking at recently, utilities, XLI, they're not down as much as some of the others. So this is pretty important. And you can do this. Remember Coifin. If you don't have a copy of it, you probably should put this onto your watch list, because it will really show you some of the things. Even Jets, one of the ones we've been looking at recently, not showing as much negativity as the rest of the market has been. So yes, we are right there right now. Close is looking pretty weak. Everything's selling off into it. Probably pushes down through the futures, you would think, to at least test the 15,180 area. And again, we close underneath this weekly 20, which seems like it's going to try to do so. We're going to put pressure on the downside. I mean, look at this. That wick is going to get closed under right now. We are 17 minutes away from seeing whether this gets underneath. And if it's underneath, come the close, it's pretty much a confirmation for a lot of day traders that it's on. So we're going to see something like this. Probably spikes down, fake rallies. And as long as the weekly ends up underneath, it will be a pretty big close. Look at the daily. It hasn't done this. Trend line will be smashed. Think about the sequence as well. What have we had? Peak, trough, lower peak, lower trough. Pretty big deal. Not across the board, but certainly for these ones. I find it hard to invest in oil with OPEC cartel. Fair enough. Though the profits over the past year have been tasty. Yeah, you've got to just think, what is the OPEC cartel's best option? And when they have the best option being that they're going to, crash the market or anything like that, and that will be what they like to do. But yeah. I'm not too sure about that. Gareth says here, little late to the party. I see Tom is still using the Donkey Kong indicator. Mixed feelings about Microsoft owning so much gaming IP. Yeah, well, that would be interesting. Microsoft's improved its rep, though. Remember, it was like the most hated company many years ago, and now it's not necessarily the most hated. Waiting for prices to come to me, next level spy. I tend to agree with you, John. Let's kind of hope in some ways this correction does occur. It would really suck to see this and then it comes down and then rallies through somehow in the middle of the area. Unlikely to occur, but something that would suck, because you basically at some point will go back down to the 50. Whether it happens now or whether it happens in a few months' time, we suspected this would occur in 2022, and it tends to be doing it. Gary says, sold NVIDIA, hope I don't regret it. Back in a few months from now, or possibly even a few weeks. So we'll see here. Semiconductors down almost 5%. Wow. Yeah. So a lot of volatility here on certain stock markets. So if we look here, semiconductors, the index ETF, still not underneath the support, but they're certainly down 4.4%. It's more the story of probably IWM and the indices themselves falling over. That's the big deal here. Based Ape says, I bought Square/Block. Yeah, that's new name at $229. How hard should I punch myself? I don't think it's a terrible idea that you had buying it at 229. Where was that? Yeah, okay. So I understand why you bought it here. You had your previous triple supports. Look, it depends what you. I think if you had it as a trade, you probably should partially punch yourself. And the only reason why is because you had a support, you bought that support, it rallied, and then it fell off and went underneath what probably should have been a stop loss. Remember, all trades should theoretically have a stop loss, a take profit concept, and of course your entry concept. If it's an investment, then you bought it here, obviously with your fundamental and TA knowledge of the support, and then it's dropped off. Investments don't necessarily have stop losses, but trade should always have stop losses. So I think that's the big answer to you there, based. By the way, I sold something to a guy. He came up to me and I said, "Oh, I noticed he had one of those. What is it? Oh, I can't remember. Bay apes, something like that." And I said, "Oh, do you have one? Do you actually own that?" He goes, "Yeah." I said, "You getting rid of it?" He goes, "Yeah, I'm getting rid of it next week." So we'll see whether he was in time to sell off his ape thing. Those things are worth. Those NFTs are worth like $250,000 minimum, I think. Why is DE up? Because some stocks, like the agricultural stocks, were actually showing better TA. So if you look at John Deere, it's got better TA in general. Much stronger looking chart. And remember, all markets aren't necessarily being affected negatively by this idea of the interest rate hike. This is mostly attaching itself to tech and belting that area. Silverliner says, "Tom, I did so well today that I'm sending you some Chick-fil-A." Very good. Or Chick-fil-A, or however you call it. Not on a Sunday, yeah? It'll be a bit off by the time it gets here. Gary says, "Tom, if you do a fib retracement from 2020 lows to Jan 2020 high, the 38.2 retracement is 20% down from the absolute highs, but the 23.6 is around the weekly 50. Okay. Yeah, fair enough. So what Gary's saying here is if you did it backwards, basically, and you get out your fib and you work it out so that you've got your pullback here, the 23.6 should hit the weekly around. So it doesn't seem to hit it exactly here. So you're probably saying 23.6 should be around here, right? And 38.2 is down here. Yeah, I think that it makes sense to get this kind of deeper pullback, but you also want to think about it from the perspective of this would be probably the first time, other than around here, that we've actually put a 23.6 of the whole move down. Either or, we'll find out. Durgesh Sakharande, $2. Tom, I can already tell he's going to say Barber, guys. Barber. We could have a look at Barber for you, man. So scroll down. Where is our Barber? We have it here somewhere. There it is. 2.24%. So the Chinese stock will probably hold better for you, Durgesh, than the rest of the market will, just because it's finding base. I still think it looks okay. And basically, you have your support. I would still think that this is the bottom for Barber at this stage. It's being hit very, very hard. You can see the weekly long leg doji above. You want it above 140 under all circumstances. That would put a little smiley face on your face. And at this stage, it's just resistance becomes support. You want it to hold around here. It'll probably be potentially getting hit a little bit in today's session, but this is right where you expect buyers to try to come back in for control. And the main problem you have is earnings, which is around 15 days away. So depending on how the earnings ends up, that's going to be a major concern there. Otherwise, the TA is looking a lot better at the first. mRNA getting whacked. Yep. A few people asked about Moderna today so far. 186 coming back into the green zone that I had highlighted here. This is right around the zone or area that I was interested in the stock for. I mean, the great rise of Moderna, the great fall from Moderna. This is what happens when stocks go into hyperactive blow-off phases, guys. We suspected again that it would be in blow-off phase. I actually thought the peak would be around this 361,400. Ended up, of course, absolutely obliterating that, as they often do. Had a great setup into it, though. Ascending triangle, breaches, goes ballistic. Fantastic. Now that it's back down at these levels, you can't just buy it here. You would be probably making a mistake to buy it just at these zones, unless you've got some investment concept. You need to see turnaround stories. And that's the idea with the market here. The Nasdaq, the S&P 500, the Dow, they're all down, especially the Nasdaq and the S&P. They're falling through supports. We've got IWM on its last little bit, selling off into the close here, showing that the market is weak. Can you really buy this support unless you're an investor? A trader would not do that. A trader's looking for the types of turnarounds that we had last year, in quality stocks such as BHP. Here we have the double bottom. Here we have the closure breakout. This is what we call an accumulation base. The volume was up, a fantastic trade, and a great level to be at. A very great level. S-Bucks is sure a falling knife. Yep. Another one that's at exactly the area where you would think, oh, I want to buy this. Resistance, support. Problem is that when it comes down at such ferocity, we've got to take into account momentum. And I think a few of you probably need to think about that. Trying to pick the bottom is quite difficult, especially when it's coming down at such an extreme pace. So at these points, you look for lightning bolts, look for double bottoms, look for those types of things. It's really important that you consider this. It's a big change from what I guess you would call a pro trader and like a beginner trader. And for anyone that's been doing it for a while out there, would you guys agree? Let us know. Someone that's been doing trading for 10 years, 8 years, anyone out there are a few of them. If you wait for turnaround stories and you actually wait for the price action to show you the confirmation and get into the participation phase, we always talk about that, you will have a better time. But you know what the problem with that is? It's kind of boring because you've got to be patient and you've got to wait for the turnaround stories. Is Starbucks on support? Yes. Is this support going to fall through? We don't know yet, but it certainly looks that way. Tanner says 100% Tom. Yes. What's up with the SPY? The SPY is falling through the daily support. So daily bullish hammer is getting smashed. Silver says, I love dips, but I love reversals even more. Jimsy says, agree completely, Tom. No buys till there is a turnaround, pretty much. And Colin says, boring, but you sleep better. That's absolutely correct. That's absolutely correct. So at this stage, for anyone that's coming in, we've got 737. Thanks so much for the likes, guys. Thanks for the support on the channel. We always appreciate it. We are looking at some big closures here. We've got our first closure coming in, it looks like in 6 minutes underneath. It would be kind of hard for me to say, oh, these are all the buy opportunities and this is every single one of the stocks we should like today. Because the problem is our expectation is if this weekly ends up closing underneath the 20, which the daily is pointing to, I mean, look at this. It's selling into the close. We're now down 2%. Then we go to the 50. That's the expectation that we have. It's the common concept of stock movement in the S&P. So can you really say, oh, I found the best opportunity? There will be stocks that show good rallies and show good opportunities, but this is showing at this stage a peak, a trough, a lower peak, and a lower trough. That's a sequence that cannot be ignored. And while it's hard to be bearish in markets, you're starting to say, well, the bears have come out of hibernation, they've gotten the salmon, and they're going through. I ran a poll. I'm going to end that poll in just a second here about whether you guys think it's going to be weak or strong. We're going to end the poll. 65% of people, or 64% of people said, yes, it's going to break the 20 EMA, and 35% of people said, no, it is not going to break the 20 EMA. So we've got a lot of bullish people out there and, of course, a few bearish people. Look, you might both be, I mean, it's very correct to be generally bullish. And I want to reiterate this. When everyone else is freaking out about the US 10-year and all these things going up, looks like we're going to hit 2%. So immaterial, we're going there. You would be surprised 1 or 2 rate hikes will completely obliterate some of this inflation concern. The Fed said something very important. Jerome said basically that the Fed is looking at it from a perspective of it's just a huge demand increase. Okay. A demand increase due to stimulus and obviously due to the fact that people are feeling pretty rich and want to buy things. Could be a whole bunch of things. Could be depression through COVID, could be just retail therapy, that type of concept, or it could be people really need it. But what I think we'll find is that this will stabilize. And I had some meetings this week with some pretty big top end managers. Okay. I've talked to them. I've spoken to some of those opinions. These are people that look after $1 billion plus, and they are all of the opinion across the board that inflation is going to be a story. Interest rates are the story for 2022, like we suspected. And that while this is freaking everybody out, they are looking at it as a buying opportunity and that it will end up fixing itself. Okay. So they're taking the positive attitude of this is buying opportunity. But what else they did say to me was that they all expect tech to have 1 quarter of weakness. Now, I don't think that's rocket science, because if we go back over to here, well, we all expect it to have 1 quarter of weakness. So I think they're just looking at the stats. They're looking at the concept. They're understanding that initially the market reacts negatively to interest rate hikes, but it's not that much interest rate hikes in the scheme of things, guys. We're looking at 3 or 4 hikes potentially, and I still think they'll get struggle after the first 1 or 2. So you'll see 1, it'll put a dampener on everything. You'll see a second one, everything will become even more dampened. But what do you think? You agree? He will raise rates, but will it really smash it? John Moore said, took a 20% fund rate to stop this kind of inflation in the 70s. So John tends to disagree with me. He's saying that the rates will have to go incredibly high. What about shipping though, John, if we manage to fix that problem? Tom, can you talk about the VIX? Yeah, absolutely we can. So look at this, sell off into the end, 207.84 here now. Ouchie on IWM. We'll talk about crypto straight after the market closes. US 500, slight improvement into the close as well. 2 minutes to go. We'll pop that just on the side while we talk about the VIX. We'll pop the VIX in here. So VIX is 23. So we know that this means that anyone that's thinking of doing swing trades should probably stay out for now, because swing trades can be incredibly difficult on a VIX over 20. And we've pretty much been over 20 for a little while. So VIX, if you're trading this and you're thinking, okay, I think VIX is going to spike, you're kind of gambling, because the VIX is a tough trade. As you know, it's expensive to trade it. But yes, if we get a further sell-off, the algorithms will get control. And especially if you see the weekly underneath the 20 moving average, the VIX could easily spike into the 30s again. And we're talking like a 30 to 32 kind of VIX spike range. Do I like trading that? The answer would be flatly no. However, the VIX is above 20, so it would mean that we want to be nimble and fast, scalping, day trading, investment levels that we like in stocks that we have high conviction in. Andrew says 3 hikes. JP doesn't want to tank the market like 2018. Yes, I think that the Fed is going to be playing catch up with the stock market and the bond market, more importantly. So the stocks are saying, we hate you, J Powell, and they'll be paying attention to that. And the bond market is getting carried away with itself. Like it often does, it overshoots the concept, and the reality is a lot less than the expectation. So here comes the market into the close. S&P 500, slight improvement here, but still on the big one, the SPX, it's still underneath the daily. So even rallies now should be met by, you would think, sells. Unlikely that this can easily recover. And weekly 20 will be the big deal here. Nasdaq will close on the support. S&P 500 will close slightly underneath the support. And IWM, the big story, 3% down, 207.78, almost a new low. And certainly on the weekly, And if it closed like this, pretty much a signal on the weekly at these closes that it's topping over. So check silver up 2%. Yep. Masasi 1973 says, got that Wyckoff vibe on SPY daily chart. Oh, yeah. I guess. So if we go horizontal, the concept here would be we've got some peaks, we've got a false breakout, which is obviously that max pain kind of concept of Wyckoff. And then we have back down to the support. So that's extracting maximum value from people up here. That Santa rally into, further movement, pretty much got near our trend line anyway. Then it wipes off, comes down. And then, of course, with any Wyckoff distribution, you expect the sell, and the sell would come to the 4,300, you would think, from this, which is going to be an exact thing we expect anyway. So it doesn't matter how you really look at it, whether you say, okay, trend line break, weekly 20, all of those things, or you're looking at it from some kind of distribution. Most likely the next stop will be the big key support. And I don't think the negative 10% would be bad for the markets. It is looking negative at this stage. So to recap, everything's closed underneath to a degree, these key zones. S&P 500 probably the big one here, just with the daily underneath the last wick that we saw as a rally last Monday in the session. Weekly 20 is still the big key factor, but for some people that will be a big deal. VIX is high, and IWM is certainly looking pretty shaky as well, kind of closing around the supports. We'll move to crypto in just a second, but let's go through all the rest of the markets. Thomas says, I have an ALB long position at SP 500 at 46.26. Guess I am done. Probably. But it's going short's not easy, guys. When you use the weekly, it's much easier. But the problem with the weekly is sometimes it can just go straight through. And that's why I suggest with most people, they actually don't short markets and they look to buy markets at key zones. There's no shame in that, not making money both ways. If you are usually looking at shorts, the best way to do it's going to be options all day, but not just to do it the traditional way that you think. So just to go buy a put is not really the best way of shorting a market. It's using a more, not very complex strategy, but a better option strategy. And I talk a lot about this in the private group mentoring that I do. And by the way, there are some spots open for Feb. If you're interested, please message us over at my email, I guess, thomas@fxevolution.com. It's pretty good. It's pretty much my life's work. So if you're interested in that stuff, it's a little bit different to what we do on YouTube, but I think a lot of you will enjoy that if you do it. It's pretty life-changing. A few people in here have done it. See what you think. It's totally different. You won't have the concerns you currently have in the markets because you'll just be more chill, you'll be more prepared, and you'll be using a more consistent concept. Don't forget about silver. We haven't forgotten about silver. So silver here trying to breach through 23.40. Looks like the daily will probably get above. We've got 55 minutes till it closes here. Pretty big deal. It's a good level. And yes, it's a sign of positive action here from silver. DXY is up though, so it's interesting that silver's going through. DXY just went straight through the 95.55. It's not over yet for the DXY shorters. Just remember that if you shorted this initially, so we'll just go, I want to show you the 5-minute, 15-minute chart. If you just go in here and just short this zone, you are making a big mistake with your trading. Unfortunately, boringness, again, it goes back. You've got to wait for this level to be interacted with the price action. If it's coming up, think about how the price action has gotten there. In this case, kind of made a little base formation, comes up, resistance, 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 then breaches it very close to the level. So at this stage, it's saying kind of, we're thinking about this and we're going bullish. The left-hand side is actually giving you an indicator. You need to be very careful here. And what you're waiting for in this zone or area is the lightning bolt down, is the turnaround story. And when you start doing that, although it's boring, you'll get way better confirmations and make way less mistakes. So you basically create like a area or a bubble, and this becomes a point of interest. And that point of interest is where you're looking for the turnaround. And if you're not doing that in your trading, try to bring that into your 2022. And when you do, big deal. It'll game change. Gary says shorting sucks. Lost hella money on puts. Yep, puts are designed for you to lose tons of cash. KK says, Tom, if tomorrow recovers, would it still be bearish? Most likely, yes. The market is telling us that it's pissed off at current information that it's getting. It's not really going to get clarity on it yet, is it? So if we go over here to what our expectations are, if we go through, where are we here? The Fed statement's coming out Wednesday, Jan 26th. So we don't really have any clarity, unless I'm wrong here, and I can't remember if I am or not. We don't have incredible clarity here coming out from anybody until the 25th. So because of that, we might have a little bit of a whinge from the market. And that's why I think, yes, there could be further sell-off. So most rallies you would think by now, I mean, especially this one, let's say it rallies, which is a high probability. I mean, you usually see sells get met by rallies. It's a common technique to destroy shorters and to really ruin their day because they lose their clarity of whether they're going to continue shorting it or not. Again, one of the reasons shorts are so hard is because not only is the market consistently bullish, it is consistently bullish across the board. 80, 90% of the time, you're going to be correct being bull. If you went in there and said, I buy, and you're an 8, you're going to be correct. The person that says, I sell, is going to be mostly incorrect. So that's one of the big issues. But just remember, it's this whipsaw action that occurs that's going to cause problems for you. If I was to go in here and say, look, I'm going to trade every US session, which is very tough for me here in Australia because, as you know, these US sessions are open during my midnight to 6, 7 a.m., 8 a.m. kind of time, I would be day trading and scalping over the next week. That would be my personal preference of trade right now because you've got VIX over 20 and you've got the ability to come in market session opens and get a really good idea in that first 1 to 2 hours on 5-minute charts, on 1-minute charts, on 15-minute charts, whether there is stop hunts and whether there is attacks of liquidity and whether there is base formations or a direction for the day. So let's say the next session rallies. We get a little 5-minute lightning bolt, and then we think, okay, we believe the rally is going to be into 46.40, and then that's going to hit the bottom of the trend line plus previous supports becoming resistance. That's where we want to sell the rip, and then you just basically take that little slither. That's what a day trader and scalper will be doing right now. They will like this increased volatility, and you will be nimble, fast, and really have no direction or whatever. But remember the principles of trading. You will have a stop loss, you will have an entry point, and you will, more importantly, have a concept of take profit. And if you do not have these 3 things, I believe you will lose in the whipsaw that is aggressive markets due to shorts. Again, if other people out there can clarify that for me and tell me their experiences, it would be fantastic. Laurie says the mentorship program is legit. Would have taken me a decade to learn that stuff. Took me about that long. Tom is worth the wait in the Bitcoins. Was it Bitcoins at $1 or is it Bitcoins at 50, 60,000, Laurie? I appreciate that, man. How do you scalp? So scalp is basically very similar concepts to what we're talking about, Gary, except for you're on 1 minute, 5 minute, 15-minute charts. Now, some people will call scalping in and out in 30 seconds, which is the traditional term. I just think scalping and day trading are kind of very similar. Really, you're just looking for turnaround stories. And scalping is best in actually session opens. Silver brings up a good point. Tom, under the last administration, they tried raising rates and it didn't last for very long. I don't expect anything different. Yes, but we didn't have inflation. So remember, they have to raise rates for two reasons. One, to cool the market, and two, to obviously combat inflation. We are in an interesting period. The question is, and the real big thing that everyone's talking about, all the big fund managers are, is does this cool inflation because it instantly takes off some of the FOMO, some of the hype, some of the froth? I believe it will. I also think that when shipping sorts itself out, which may still be 3 to 12 months away, that will really fix it. Once we get shipping under control and we cool off some of this FOMO hype into buying stuff and this huge demand, which I think again will be cooled, it's very easy to flick the switch on people's sentiment. How many of you have been ruined on trades, sentiment driven? This is always a question I ask myself. And I always think back, I always remember, how did I feel during the 2020 pandemic when things were crashing and everyone was coming into me and saying, oh, everything's terrible, this is all going to explode? How did I feel during 2018? How did I feel during the Greek crisis? I was trading that period back all of that decade ago. At those points, were you able to pull the trigger? And was sentiment switched in only a week? And most of the time, you'll have to always answer, yes, it is. All right, let's go through a couple other stocks. Surprising how well Tesla held today. Gotta say, it's like a safe haven right now. 1,030. Wowzers. Is this even open? I would think it's not. It actually rallied and then sold off. Do be a little bit careful here. Tesla often does its own kind of thing. But if the market continues to fall, expect Tesla, if it gets through 1,000, remember 1,000 being the key level, to potentially have some very nasty sell-offs. Again, day trading stock at this stage, and we will get clarity once we breach either of these sides. So Tesla's still looking good, but my goodness, it held a little bit too well today in the session, you would think. So answer some more questions here. On scalping, how do you plan your stop loss? Yeah, very good question. Okay, let's scroll into 15-minute chart here. All right, so because we practice something like lightning bolts, let's have a look here for a lightning bolt concept. All right, so here's Tesla around 1,000. So let's say you had come in with a rectangle and you said, all right, I'm looking at $1,000 for Tesla. Fair enough. Now, some people will just buy $1,000. On this particular day, they would have been correct. And they'd say, well, I'm better than you, Mr. Trader. But Mr. Trader, what you're doing is you're saying, okay, I need that turnaround story. So what you're really doing is you're waiting until probably around this price to get in. Now, that means that you're not getting until 1,040. But why you're doing that is because you recognize you've got a lot of resistances here. See the price action? It's just being the reality of where I think you'd be getting in. So you've got shorts, you've got a actual short off candle, and then all of a sudden you see a bullish candle coming through here. At around this point or this point here, you will have triggers to buy due to the lightning bolt. So it makes it quite easy where you can place your stops. If you say triggered here, you could place your stop under here or here. Use market adaptive concepts. If you're someone that always places your stop loss 20 cents under or $2 under current price, it's not market adaptive. You want to use some form of price action, and price action will be coming from these lightning bolts, will be coming from the actual pattern itself. So if you see a double bottom where you're going to place your stop loss underneath the low, or if you're a bit more advanced and you see a price like that moving through, you can put it under there. So try to use price action as much as possible. It's a great question, but take some time to get better. CM says the 4 hikes are predicted March, June, November, December. Yeah, that won't happen. I'll place a coffee bet with you, CM, that they will not get through 4 hikes in 1 year. I want to ask the room, do you think they're going to get 4 hikes in 1 year? I know that's the prediction, but the 2-year currently is sitting at 1.047. So this is saying in 2 years we're going to get these hikes. Does anyone actually think that we can get all of the hikes in 1 year? What do you guys think? Darren Jones, always appreciate you, Darren, very much. $10. Tom, when I look at the Tesla one-day graph, I see a possible reverse head and shoulders. Is this invalidated because of today's dip? Nothing ever is invalidated in terms of your question there, and I know where you're looking at it. Remember, a head and shoulders isn't in play just because you see the right shoulder. That doesn't mean, oh, I should be buying it here, Darren. It basically what you're saying is, okay, if we have a scenario where it breaches 1200, we're going to have a massive rip on Tesla because of this movement here, the head to the neckline and all of that. The head and shoulders or the pattern doesn't activate till it gets through the neckline. And I think that's pretty important. So nothing's invalidated yet, but if it gets underneath the $1,000, the answer would be yes, the pattern would no longer exist, if that makes sense. If it doesn't, please let me know. Thank you very much for the support. So Sarah Jane says no. Greg says 3 hikes max. I'm going to go with 2. 8 says nah, 4 max. 2, maybe 3, says Matt P. Probably thinking about me. Max 3 rates. RRPY says no. John says 3, 3, 3, 3. No. 2 to 3 in 2022. 4, very unlikely. And Stockholm says yes, 4 hikes. JPMorgan says 9 hikes. What, in 2 years? JPMorgan, insane. In 2 years, 9 hikes. Get ready for property to get smoked. 9 hikes. JPMorgan been smoking too much of the Tilray. 9 hikes, 2 years. If that happens, maybe I'll have to buy more than just one person coffees. I'll have to buy quite a lot of coffees. Big mistake to say they won't do 4 like they say, says Kerry. In 1 year, I don't know. The Fed said a lot of things in the past. We just have to go off again the previous history. The Fed used to say we're going to raise hikes. And if you've been trading over the last decade, you would know that when the Fed has said something, and again, someone else back me up here, they haven't always done it. They haven't been able to do it. So when the Fed said we're going to raise rates, they had a real problem with that. They did it slower than anyone expected. Now, maybe they've learnt lessons. Maybe they're prepared to do it. And I do think you shouldn't fight the Fed. They are showing us this type of thing. But I don't think they can go at the speed of 4 in a year. 9 seems pretty high, though. Sorry, JPMorgan CEO projects up to 7 rate hikes in 2022. Whoa. Wowzers. Alexandru says ARK KK. Well, I'm not going to go with that, but I'm not an economist, am I? So how do I know? All I really care about is reading the price action and going from there. And I still, regardless of his 7 rate hikes, I bet you JPMorgan also have a positive outlook on the end of the year. For anyone that's bringing the stat in with JP. Do JP still have the S&P 500 being higher than it starts by the end of the year? Jamie Dimon says that's what it will take to cool inflation. At current, it's possible with current shipping issues. As someone said before, it took 20% to really cool 70s inflation. RK, someone wanted to say, and sprung a leak. Yeah, Kathy Wood's going to come into a lot of fire here, especially if IWM goes through. I mean, higher rates, again, don't think they're correlated with innovation not doing well. Some people will say, well, they won't be able to get cash. You watch them get cash. Well, they won't be able to pay back their cash. They'll just re-debt it. It initially shocks the market. It will pull. I still think that RK come after the first quarter this year, the bloodbath that's going to be left here from the massive amount of fall through in the market is going to provide opportunity. But wait for the base. You have to. If you catch this right now, what are you catching? You're catching the most random price ever. ARK's fund, if it wasn't for Tesla, would probably be here already. I mean, Tesla's the only thing saving this thing right now. It's right down, guys. It's right down. So we could go to $60 on it. Even with Tesla being this high, that's ridiculous, but it's true. We need the base. Bring the base on. Base formations are super important. And if you want to go through the stocks, I mean, you go through some of these. Look at Roku. It's all the way down now at 170. I bet you a lot of you didn't know this. Remember, Roku was once, I still don't understand this stock, by the way. I don't even know how it got here. $500, now 166. Another one that she has a lot of, Zoom. Zoom currently trading 157. And this is a positive. I brought up the data on this. Let me just bring up Zoom here. Zoom Video Communications. The PS ratio, check out this. I mean, the sales have actually been improving. The EPS has been improving. The PS ratio is now one of the cheapest ratios it's ever been. The PE ratio is actually at 42. It's actually a profitable company. Earnings per share 3.76. Yes, the moat, we argued last year, the moat sucks on it and all those things. But they are coming down to more fairly priced stocks. And that's why when we get this irrationality that's going to happen due to these interest rate hikes, and especially if we start forming base, there could be opportunity through here, through so many stocks. Crowd, one that I love. Net got obliterated today. Once a $200 stock ripoff, by the way, up here. I did say it on stream. Completely BS price, okay? Too expensive. 93. Well, we're coming back down into the buy zone for this type of stock. Now, it's still got pain in front of it, you would think, based on what we're seeing today. But we're looking for base formations. Find the base. Much, much better. Giovanni says, hey, Tom, can you take a look at some TA on ABBV? Thank you. Will do. Thank you also to the 800 people here. If you haven't already, please subscribe. It does help us out. And we very much appreciate it. 2022, we've got some evergreen content coming. So we've got a whole bunch of training, learning kind of things. Some of the concepts I've learned over the last 12 years. I'll be putting them out over the next couple of months. And we've possibly got some other amazing announcements as well for the channel. So that'd be good. Now, someone said, is that where ARK's going? ARK is more, you don't really want to do the analysis so much on ARK. You want to go and do the analysis on the stocks that's held. So almost all of the stocks, you'll go through the top 10, do the analysis on those, and you'll notice that almost all of them are coming down to support levels. And Tesla's really the thing that's holding it up. ABBV. So this is a pharmaceutical company. Healthcare and bio still will probably be that biggest sector rotation that we see this year, 2022, 2023. They'll have that strength in them. It doesn't look terrible, does it? I mean, it's still strengthening. Today was up 0.67, so not every stock is down right now. I think you need a breach past 138. And then because you've got like a little bit of a range here, maybe another rip rally. I'm not sure why it's up so much. It's worth 241 billion. You've got this breach of resistance down here. I guess you might be looking at it from some kind of pole length continuation. I don't think that's going to happen for you. But yeah, if it breaches, the previous rally was pretty good. Here, it false broke. So be wary. And you need a 138 plus, and then that should signal further strength here. She's been selling Tesla with both hands. Well, she's brought her percentage back down, but yeah. And Jeff says, why bother with RK? Just create your own hyper portfolio. Yep, we just use it as an example to obviously show what hypers are doing. And we'll check out Bitcoin in a second. We're going to do that very soon. Giovanni says, hey, at FX Evolution, can you read my dono, please? Sure, man. Did I miss it? Oh, I got it. Don't worry. I already just did that then. Tom, can you have a look at the Snap outlook? Yeah, that was a classic one where a lot of people saw earnings and just bought the dip, and they're really getting punished for that now, unfortunately. So this was the dip purchase. We saw the earnings come through. It's sold off pretty aggressively, 35.70 currently. And is there even a spot where you could see Snap stopping? There is just a falling knife right here. I mean, you would think it's around $30. And that would be, again, consistent with this idea that if the Nasdaq continues to fall through, and again, we get through that S&P 500 weekly, that's when we'll really see a big repricing of all these tech stocks. S&P 500, weekly 20, closes underneath, goes to the 50, our expectation. All these stocks will get down to these kind of levels, should that occur. This is one of those times where being patient may pay off. Because buying here, you're buying no structure whatsoever. You might as well have just been shorting. That's also true. Ionia, I don't know, Leonias, I guess, or I'm probably completely mispronouncing your name. But we'll just say you can buy ARK if you don't want to get involved with selling and buying and all the tax implications that can come with that. That's true. And Jimsy says, hey, Tom, what are reasonable PEs and PS ratios for growth stocks like Square, Twilio, PayPal, Enphase, Take-Two, Snow, PLTR, Net, and Crowd? So one of the best things to do, guys, is going over to macro trends, is going to be putting in here maybe something like, I don't know, we'll go with Enphase for an example, yeah? We'll put Enphase into the system, go to PS ratios. Most of them don't have PE ratios, so you can't really use those. And then you've just got to look at the history of the stock and then where the ratio has gotten to. So right now it's trading at 16.51. So the average here, let's call it, with this one, you probably don't really want to be purchasing it until it's back down around 10 from a pure PS ratio. Let's use one that's been around for a little bit longer. So we'll use CrowdStrike here in terms of ratios, because I know it's getting much more back to its area. So it started at 20, then it went to 33, 32. And again, these were during the economic kind of crisis period. So that might not be showing us enough. Let's have a look at PayPal, one that's been around for a lot longer. So if we go to PayPal, remember it lost its eBay thing here, and that's been kind of hurting it. Is PayPal back on a PS ratio that's much more fair? Well, it's been ratioed at around 6 to 8 for a long period of time. So because it was 6 to 8, any of this was probably an overinflated bubble, even with the growth curve. Because think of this. The growth is kind of consistent. Yes, it's increased a little bit more percentage-wise, but in general, that's a fairly consistent growth curve. Yet the price went crazy, and the PS ratio should be in line with this consistent growth. You know what I'm saying? And I use this all the time for something like Apple. Like, one of the reasons I think Apple can be cheap or expensive is when you look at, in this case, the PE ratio, and you go through the history. I mean, history is telling us that Apple should be between 17 and 20, maybe 22. It's currently trading at 30.85. So is that overpriced? Yes. But let's look at the growth curve here. So some consistent kind of growth, a little bit of growth here, but then all of a sudden it's gone into hyper growth. And when you're in hyper growth, you can go back to when they, like, you know, around this period and say, okay, that's why it's repriced itself, because it's growing at a rate that is way faster than actually any of the rates before it. And that's something I do think about when I'm looking at whether these ratios are good or not. But to answer the question, I would look at previous history, try to find those mean and medians, and then try to grab them around those areas if you're looking from a basic investment perspective. Snap snapped? Yeah. I remember Snap under 10. All right, Clifford, I'll do you because I've seen you answer so much. Then we'll do crypto. So Clifford said, FX Evolution, big fan, long-term follower, just never post. Able to pull up WFC, Wells Fargo chart and tell me what you think. So earnings is out for this now, yeah? So all of the financials look kind of similar. Well, Wells Fargo, firstly, this company, I always thought was never a buy. From what I understand in America, and I've never used them, this bank has always been less than exemplary with service, and they're not really doing too well. From a TA perspective, though, taking that out of it, look, it's rallied. If this market continues to sell off here, let's say this rip is continues to sell off, you kind of want to really not pick this stock up till around 52. I mean, it's very tough to buy here. The only way you can buy here is if you believe in a rally that's going to continue for the stock. Look, if you got it on the breakout, fantastic. Great work to you. You've done the correct analysis. If you got on the breakout, well done. If you're wondering where does it stop, it's pretty close to there right now. Why did it stop at 59? And why did it go into earnings around this level? Because look at this. We're right at the resistance period. So for me, it's kind of done. If I was buying at 52 plus closeout into ahead of earnings, well done. Fantastic. It's a great buy. If I was selling it around 59.60, I think that's the right play just because that's the previous peaks. And that's the trade. So that's how I feel about it right now. Wells Fargo doing better than most banks bought during the COVID crash. Oh, it got obliterated. Yeah, for sure. And Monica says Wells Fargo is a bad bank IMO. Yeah. Yep. Okay, Lou likes Wells Fargo. Never had an issue in 20 years. And then Laurie does not like them. So there you go. It's a split opinion bank. But then again, I think we could probably look at anything there. NFL says one vote for Jimsy's question, which was probably about PayPal, was getting a deal buying PayPal at 230. Well, again, if we go back to the PS ratios, you'll see where you were getting a deal and you're getting close to getting a deal. So yes, from that ratio, you're starting to get it. You might have to hold for a little bit. Let's just quickly go through a few commodities, then option, and then the crypto market. Thank you again for holding with us, 800 people plus. And we've got here US oil, $86, breaking through new peak. Is inflation poking its head out here as well, very scarily, or is this just OPEC stuffing around with it? $92, you would think, becomes the new norm for energy now. That's where it's probably going to go up to. So get ready to possibly pay a little bit more here at the Bowser. Americans will not be happy with that. You guys won't be happy. Supports here becoming resistance. I got a hybrid, so it's like $3 cheaper. No, look, I think that this will all be short term, and overall, while we'll get up to these $100, maybe even 110, at that point you'll see OPEC smash down oil again to make some money. So 86 into 92 seems like a fairly decent possibility. Still a big ramp here on oil. It's breached through, so you probably look like a rally, pullback, previous resistance becoming support, hopefully moving averages coming up with it a little bit, 4 hour, etc., and then picking that up to the 92 could be the way it plays out. Gold still stuck in the middle of nowhere land, 1813. We're looking for 1830 plus breakout. Silver, yes, it is breaking at this stage. We'll wait for the close and do the daily show on it. And let's have a look at Bitcoin. Wow, Bitcoin actually recovering here after the market closed. So sold off with the Nasdaq. Really cool candle coming through here. Daily 42,315. Bullish hammer, 2 hours, 25 minutes till it closes. Not bad. Let's go over the weekly. It's stuck into the middle of nowhere land still. And let's go to the 2 hour chart. So bit disappointing how it interacted with this zone. Should have done better. Didn't. Still holding above the 40,000, which is very pivotal. Bitcoin underneath 40,000, big sad face. You won't like that. But this rally is promising here for Bitcoin. And until it gets through 44,000, you can't really be sure that this thing is really trying to put in the base properly. 46 next stop after 44. And Ethereum, 31.56 again, should have held around 32.50. Tough market at the moment here. And you're looking for a 34 into 36. So not bad turnarounds on the daily, especially for Bitcoin. The rest of the crypto market is all recovering, but still shaky because of the initial sell-off. So you look at any of these, ADA, you bring any of them in. Yeah. Bitcoin's pumping. Yeah, Bitcoin's certainly improving here. Showing the strength. I would love to see daily close like this and then a follow-through candle. So just some follow-through action, just momentum. We don't necessarily need to see a next close. We just need follow-through on the next couple of hours after that, and it should be going quite well. NFL says Wells Fargo is generally evil, but Diamond's protege Charles W. Schwarf has helped them turn around a bit, and whatever Tom said. Fair enough. Lala says, I got $3 a liter. Oh no. $3 a liter? Whoa, what country are you in? $3 a liter. That sucks. So I'm not sure what's petrol at the Bowser in America now for the gallon. So Australia about $1.70, probably be $2 now in 2 weeks. Imran says, surprised so many believe what Diamond says. This is pretty true. Has to say, he's a bank CEO who literally profits from much higher rates. Of course he does. And of course he would say this. Yeah, true. $3 a gallon on the East Coast. Okay. What about UK? We got any UK? Oh, there wouldn't be many UK people still up. Anyone in the UK got it? I want to know what it is. Give me the poundage for a liter in the UK. Somebody know? It's so expensive, guys. People in America, Australia, Canada, we don't know how crazy the UK is. So 285, 320, $3. But I really want to know UK's price. When I was over there many years ago, it was so expensive. 146, $1.50 pound. So it's about $3 a liter, or about 280 a liter. Ooh, damn. Ain't cheap for you guys. I don't even know if I'd own a car over there. I'd be like, you'd be wanting to go a Tesla, wouldn't you? Or some electric vehicle over in the UK. My goodness, it's expensive. So great news here for crypto. If we can hold up, at least then it's forming some form of base. Let's have a quick look at the market futures on the NAS. So NAS still holding down. Small rally here for the S&P 500. Very small rally. Starting to look pretty damn negative, though, towards the market. And you think that any of these rally rips are most likely going to be met. I would think tomorrow is going to be a good day trading day. And don't have too much opinions on what you think is going to happen. And why I say that is because let the price action, when you're scalping and day trading, let the price action show you the way for that session. And generally what it does is it will either rally in the morning and show you in the first hour a stop hunt style position and then completely reverse, and you'll be able to be reactive to that. Or you get a really nice base formation followed by some form of lightning bolt or some form of really nice turnaround, and then you can trade that rip for the rest of the trade or trade the sell for the rest of the day. You be reactive to what the market's telling you. Don't try to have an opinion on what you think is going to happen that day. You have to be reactive based around the supports, and then let the longer picture play out for itself, and then pick up based on the weeklies and based on the dailies. Sweden is €2 per liter. Wow. And Silver says, I just want a fast car that gets the crappy fuel mileage. There you go. You like being the speed demon. I don't blame you. I've driven a couple of nice cars, and there's something nice about them for sure. All right, guys, that probably brings us to the end of the show. So thank you so much for joining us today. Thanks for the support as always. The market, yes, looks scary, but I think I'll reiterate my concept, which is 2022 might be the year of the trader, but there's also going to be some great investment opportunity. We still look to hyper stocks. We still look to biotech. We still look to healthcare, and we look at them as they form base formation. And that may not be this month. It may be next month. That's the patience for the investment game. For the trading game, all you're really looking for is going to sectors, watching these indices, and as they fall through, coming in during the day and being reactive to the market conditions. Remember, when VIX is above 20, I usually personally reduce swing. I basically cancel my swing trades and I move into being nimble, being fast, being quick, and making decisions that are reactive to the market conditions. Try to leave your opinion at the door. It doesn't really matter what we all think. It's the reality of the situation, and being able to cut through the other problems is just really, from an investment perspective, are we fearful or are we greedy? And at this stage, even with 3 rate hikes, I'm still personally going to be greedy until the housing market tells me something else. And that's what I'll leave you at today. We'll find out. All right, everyone. Thanks so much. If you are interested in the private mentoring stuff for Feb, please message Thomas, THOMAS, at fxevolution.com, or just send me a PM in Discord, and I'll let you know. They are obviously limited spots. I think it's personally one of the best things that Well, it's the best thing I've ever created because it's everything that we do all the time. So if you're interested in that type of stuff, let us know. Otherwise, have a great day, have a great evening, morning, afternoon, wherever you are in the world. And we'll see you a little bit later for the daily show. Bye for now. Thanks so much to supporters as well. Appreciate it.